Hey guys, welcome back to Jesse Invests. Today we're going to look at my Roth IRA. I'm really excited to update you guys on this. I have not talked about this portfolio in a long time, many months. But before we get into it, hit that like button down below, hit that subscribe button down below. It helps me out a lot. Today we're going to dive into a few things here. We're going to look at how much I have in this portfolio, which are kind of my goals with this portfolio. And also we're going to compare it to the S&P 500 and see how we're doing side by side. So, all right, without further ado. So for my Roth IRA, I'm at $7,200. We are up today. In the past week, we're up 3%. We're up 3% in the past month. In the last 3 months, we're up 7%. So far this year, we're up 3%. In the last 12 months, we're up 5.76, pretty much 6%, and all-time returns are 18.74%, or $6,000 of my own money and $1,000 in gains, or at $7,000. So a little bit about my Roth IRA. It is on the app Robinhood. I'm using my phone to record though, so I do have the desktop version pulled up for you guys. I have a few positions in this portfolio. I have VOO, VYMI, VICI, Google, and SWBI, which is Smith & Wesson. I'm going to talk a little bit about each of these positions. So let's take a look at that. We can see here in 2025, so far, I have contributed $533 into this account, and I can contribute $6,400 more dollars until I hit the max. Robinhood does a nice little wheel here, so you can see where you're at. I'm about 10% filled up on the contributions for this year. In 2024, we about 20% maxed the portfolio with over $1,000 contributed. And in 2023, also about $1,000 contributed, and we started it in 2023, so there's nothing for 2022. Anywho, we're at $7,000 in the portfolio. Here's what I have invested. I have, let's see here, I have $5,500 in VOO, so that's a huge portion of the account. That is, I'm going to say over 70%. Let's see here, portfolio diversity. Yep, 73% of the account is invested in VOO. That is higher than I want. I don't really want 73%. I want more like 50%. So I'm going to take a pause from adding into VOO, or I will rebalance here in about a week to get that back down about 50%. But I have about 10 shares. At an average cost of $4.75 a share. It's at $5.66, so that equals a profit of about $1,000, about $900 in the green, up 19% on my money, which is super nice because I have been investing in this for over 2 years now, so it's about 10% return a year. It's really awesome to see that. And if we go back to the list, we can see that I also invest in VYMI. I have 1.5 shares there, or $116. And VYMI is also a 14% return on it, up $14. VYMI is an international fund, so it invests in stocks around the world, not just the United States. I want to say it's even excluding the United States. So that's just for some more diversity. That's up 14%. It pays a nice dividend. I like having that in my account. I definitely want to have more in my account of it because I want to say it's very low. It's only a few percent. I think it's about 4%, I want to say, or maybe, let's see, even lower, 1% of my portfolio. So I definitely want to buy more VYMI and get that up more to like 20%. I want more exposure internationally, so that's something I will do when I rebalance here. Vici is up 10% to date. I'm up $62. I have 20 shares of Vici at an average cost of $29.34. So that's about $3 under the average price. You know, I have times 20 because I have 20 shares, so I'm up about $60, which is really nice. That makes up about 8% of my portfolio, which is kind of in line with what I want. I really want about 5% in Vici, so Vici is another thing I'm not going to be buying a whole lot of right now because I'm at where I want to be with that. Google is a recent ad. I really have a strong investment thesis on Google. I feel like they are really undervalued, and so far it's up 5%. I want to have definitely more of this. I want to have about 10% of my portfolio in Google. Right now I have 0.11%, so about 100 times more Google than I do right now, which I only have $8 in. So definitely want to get to about $700-800 in Google. That would be nice. And then SWBI, Smith & Wesson. If you guys have followed the channel for a little while, you've known that Smith & Wesson is something I've been investing in this portfolio for several years now, slowly trying to dollar cost average in. But even with doing that, the stock has continued to sink. I have an average cost of almost $13, and it's at $8.70 right now. And it has gone between, let's see here, $16 and $8. So with $8.70, we're sitting at an almost all-time low, lowest in the last year. And my average cost is kind of in between these, but closer to the high. So it does have a great dividend yield of 6% right now, but I just feel like it doesn't really fit with the rest of my investments and all that. And I have a heavy percentage of it. I don't want 11% of my portfolio in this stock, and I'm down $400. So what's the situation I'm in with this? Am I cut my losses, or what am I going to do? Well, I just bought up to 100 shares. And if you guys know about options, once you get 100 shares of a stock, you can start selling covered calls. So I'll pull it open really briefly here. I can't do it right now because it is Sunday, but I will be able to sell a call on SWBI now. And let's say we're at $8.70. I'm not going to get into too much of how this works, but I can write calls here at higher strike prices and it's out and get the bid price. But I will have to pick pretty far out. So let's say I want to write a call for August 15th. I believe that it would be still be under $10 by August 15th. For making that bet, I'll receive 5 cents times 100, that's $5. And if it does go above $10 by this date of August 15th, I will have to sell my stocks for $10 a piece, which would be a loss. I don't want to do that. But that is something I can do. I can make some side income off writing these little agreements, these contracts, these covered calls, because I own 100 shares. And if we look at the chart, it is very cyclical. Every few years, this happened in 2007, this happened in 2014, 7 years later, this happened 2 years later, next jump was 4 years after that. Every so often, it has these big jumps where it will go from lows like where we're at now up to like $22. And then, this was down to $4 before exploding after COVID to $34. A couple of reasons why it does this. Number one is it reacts to world ending. It's kind of a stock against the world ending because it's a gun company. So people want to buy guns when they feel like things are going to crap. So when there was the 2008 financial crisis, well, the stock kind of exploded. When in 2020 there was COVID, stock exploded to $34. And right now, people aren't really trying to buy guns, so it's down down really low in 2025. So I'm going to hang on to the stock for a while, I believe, write covered calls on it, and kind of hang around until we get the next pop. If we get to break even, I will cut my losses, I think, if we get to $13, or I may hang on a little longer and see if it can get me some profit. But I am on the way out with Smith & Wesson. I am not planning to hold it for a while because it's definitely a big loser. Besides what you see here, I do want to add QQQ. So I do think I eventually am going to shift towards just a 3 ETF mindset for this portfolio. VOO for S&P 500, VYMI for some international exposure, and QQQ to go pretty bullish on tech. QQQ has outperformed VOO the last many years. So I think, in 10 years, we're going to look at this count. It's going to be VOO, VYMI, QQQ, and maybe Vici, because I do like Vici. Maybe Google. Maybe Google will stay for a while too. But all I know is right now I do not want SWBI. I am bullish on Google, and I want this to be a small portfolio with not a lot of stocks. So I'm going to be switching out SWBI for QQQ in the near future. Go more ETF focused. Hope to match or outperform the S&P 500. And yeah, so speaking of outperforming the S&P 500 real quick, we're going to look at the investment returns visualizer. This is a spreadsheet that I have built, which is available for you guys as well down in the comments below in the description. You can see a link to see all my spreadsheets I use in all my videos. You have access to all of them, 10 templates of them, just for watching and supporting. So down there below, join the Discord. There's also a community of investors if you want to hop in and talk about stocks and investments with people, personal finance, That is all available to you in the Discord. I'm going to pull that up here and show you guys exactly what that looks like. I think we're going on about 30 members right now. So here it is here. So we are at, let's see, about 20 members right now. We can see here that I talk about my IRA, talk about my M1 dividend portfolio here, letting you guys know what I'm buying before I show my videos, what I'm selling. I have announcements. I have all my spreadsheets here, which I will black out so you guys don't have the links without joining. But yeah, hop on into the Discord, talk about stocks with people, see where things are at, and yeah, build a good community. So that's available for you guys down below as well if you're interested. But anyways, investment returns visualizer. So for July, as it is June 29th, I've plugged in all my returns. We can see how the account I just showed you, the retirement account, is comparing to other stocks. We can see that this last month everything's kind of flat, but we can see here that my Roth IRA, this kind of amber line, is underperforming all my other investments. It's underperforming the S&P 500. I'm underperforming Bitcoin, underperforming my main video portfolio, which is M1 dividends, and underperforming gold, if I didn't mention that already. So it's still performing pretty well with returns of 18.74%, but I am making 32% returns on my M1 account. The market is returning 30% right now. Bitcoin is up 37, gold is up 30. So everything's kind of around 30, but my Roth IRA is only at 18% returns. So as we bring it more in line with these ETFs, I think we will see some growth soon, and I hope that it surpasses these other investments. It becomes my top investment account. That would be really nice to see. Last but not least, guys, I am making some dividend income on this account. So VOO does pay a dividend. VYMI and VCHI are pretty dividend focused, as well as SWBI. So I do, let's see, I did make this month $10.42 in the month of June in dividends in my Roth IRA for an average monthly dividend payout of $10.54 a month. So far this year, I've made $63 in this account, which is kind of nice to see. Hoping to beat this $151 I made last year in the account. And yeah, so we make a pretty good amount of dividends in this account, close to $150 a year, over $10 a month, which that's like a streaming service right there without touching the stocks. You know, if I just took out the dividends, I could cover like a Netflix subscription. That's pretty neat to know. While not dividend focused, it's cool to see that that is something that comes with this. So yeah, that's where we're at, guys. Thanks for watching. Hit that sub button again, hit the like button down below. If I sound a little monotone today, just because I am dealing with a little bit of sickness right now, so trying not to hurt my throat. But yeah, appreciate you guys watching. Thanks for checking out the channel, and subscribe for more. I'll keep you guys updated on everything going on, everything stocks, personal finance, investments, money, debt, you got it. Thanks, guys. See ya.